Hey everyone, welcome back to the channel. I'm Doug the Retirement Guy, and today, why am I considering Social Security at 62? I'm going to do the math that nobody ever explains. And that's right. I'm at a point right now where my wife actually is getting to the point where she can start to collect Social Security. And we've been doing the math, and I said, hey, this is going to be something to help with all of our YouTube people, all of our Patreon people, to try to help out and give you guys some input of when to take Social Security and give you my personal reasons why we're considering doing it right here at the first opportunity of 62. So, hey, get your cup, fill your cup up with your favorite beverage, sit back, and let's learn together about Social Security. Before we do, I got to do this important announcement. The content for this information is educational and entertainment only. This is not financial advice. If you need financial advice, talk to a financial advisor. Past performances do not guarantee future results. Hey, before we do, if you don't have one, don't be afraid. Order one today. We'll get them out to you ASAP. That's our 11 ounce or our Big Daddy 15-ounce coffee mugs. Uh, what we do here, this supports the channel. We don't take advertisers. We don't take any outsiders. We do this because we want to stay biased and have only our opinion of what we feel. Use the QR code. Use the link down below. You can order these. They go out immediately for you. They make great gifts. They're fun little things. But what you don't want to do is you do not want to drop it like I did. Going out to my truck, I dropped my mug, shattered it on the driveway, and I said, this is crazy. And instantly we went ahead and got a 40-ounce travel mug that fits great in most cars. Nice support handle, straw, drinkable all the way through, keeps it well insulated. We have these now available. Don't be afraid. Do the same thing. QR code, link down below. Love to support the channel, and we thank you. So let's get into this. The decision that reshapes retirement income. At the age of 62 is the earliest generally available retirement benefit package there. It results in a permanent reduction in monthly checks. You lose about 30% when you go to the age of 62. Okay? You lose that from what they call the full retirement age. Now, based off of your birth date and all that kind of things, for me personally, total full retirement was actually 67. So I was taken about 5 years early. The unreduced benchmark benefit, the baseline upon which the other calculations are all built from. And then there's also, we started looking at this, said there's a bonus if you wait until 70, the largest monthly check possible through delaying your retirement credits, no further increases after the age of 70. So technically it comes into about a little bit of 8% growth each and every year that I wait after full retirement. So all of a sudden I got these big questions for my wife to make for her and help her through this. Is that we're going to do it at 62? We're going to wait to full retirement. We're going to do it at 70. The biggest monthly payment automatically creates the best retirement outcome. And that was actually what my wife asked. She goes, don't you think the biggest monthly payment? And I said, no. The larger check is only one piece of a complex puzzle. We got to look at your life expectancy. We got to look at early payments received. We got to look at your current health. We got to look at spousal protection. We got to look at lifestyle goals, working income, and that retirement freedom that I talk so much about. We're going to start with the actual numbers, not someone else's. So when I sat down and verified the data, it's real simple to do. You create or log into your ssa.gov account. You review your personal estimated tailored to your specific work history. Okay? You avoid generalizing estimates. Do not rely on your neighbor's benefits or a TV advertisement or a YouTube channel that says this is what the average is, or a spouse estimate, or anything else. You got to get your hardcore facts. So ours came into, my wife sat down, she goes, okay, let's look at this. The premium amount, 100%, is the benchmark. If she takes it early, she loses about 30% or $2,500 is what she would receive. If she waits until 70, she would get $3,700. The difference, between this is about $1,200 a month. Okay? So which is about $14,400 a year. So my wife was like, I can wait till 70. We've been doing good. Been doing this for 10 years. I can wait a little longer. Another 10 years is not going to kill me. And I hope she doesn't. But I'm like, hey, look, I think 62 could be the better number for us. So the math most people skip, and I call it the head start of it all. This is where I sat down with her and I said, look, we got to do this math. We got to take a serious look at this. And I wasn't trying to sell my idea. I wanted to put all the facts on the table to see, does this make complete sense? So the math most people skip is the age 62 called the head start. So what is that? I take my $2,500 a month benefit, I times that by 12 months per year, and I times that by the 8 years difference between my 62 that I want to choose and her 70 that she wants to choose. When you add that all together, is I'm going to collect $240,000 in total payments before she gets payment number one. An early claim collects 96 monthly checks before the age of 70 can claim even the beginning, their first one. By that time, the larger check starts at the age 70. And you already nearly $250,000 ahead in my 62 plan than her 70. Okay? So the simple break-even point that I calculated out, claiming early at 62, I got that $240,000 ahead. The late claimers are going to gain $1,200 more than I'm claiming. So when you take the $240,000 and divide it by 1,200 advantage, that's 200 months to catch up. So she will have to be 86 years and 8 months before she catches up to breaking even. And at this point, I have to always ask, one, at 86 years old, are you going to need that extra money? Two, at 86 years old, now I love my wife to death, and I hope to God this answer is absolutely, positively yes. Are you going to be alive after 86 years from now? I love her to death. I hope she lives to be 500. I really do. I just wish, I hate using those kind of things and saying things, but 86 years before you break even. I said, this is amazing what we're talking about. And this is the math no one ever really looks at and takes a hard turn at. Social Security is longevity insurance. The case for waiting. Stronger income floor. A large base check provides a higher permanent inflation adjustable floor for life. The limited future options. Waiting matters most when earning options are restricted and healthcare costs rise, and the risk. Social Security is the only income source that I hate to say this one, but that is guaranteed and indexed to a COLA. Okay? So I put may in there. I know it should be many, but I'm putting it may if government can always mess up anything. But let's keep it positive. Okay, comparing the outcomes. So here's the thing that I always looked at too. Evaluate your strategy by looking beyond the immediate break even. Forget about the break even point. But let's look at the lifestyle that impact at different ages. Living at 75, early claim flexibility. Living to 95, delay your claim protection. Healthcare needs late in life. So would I ask you this? If you're going to live to 75, which I know you're going to say, no one knows when we're going to live, but you got to do something that is hard to do and being right to it. you got to look at yourself in the mirror and say, what's going on? Are you sitting behind a desk looking at a computer? Are you sitting and watching TV every night? Are you doing anything to generate yourself to motivate to go farther? Look at your parents. How long did your parents live to? How far did your grandparents live to? What's happening in your entire family? I will be honest with you. My father passed away at 72 years old. And that's haunted me ever since. I always said, man, I follow a lot what he does. I do a lot what he has done. I don't want to die at 72, but the facts are I'm probably going to be living to that 75, 80 range more than likely. So I'm going to for sure take early. Now, my mother, on the other hand, is 91 years old already. Who would have guessed? Her parents lived long. So I got some good genes on one side. I got some rough genes on another side. Same thing with my wife. I asked her. She's had the same scenario. So we both kind of agreed, yeah, if we sit down and think about it, we're probably in that 75 to 80, 85 range, somewhere in there. And it's hard to talk about that. It's hard to do. And then what about healthcare? Across the board, both of us fairly healthy. She follows more of her dad's side, health-wise, been okay. So which option provides the most for an age of 85? And do your investments create early claim of freedom? And will you outlive your other retirement assets? These are the questions you have to ask yourself and say, wow, and where do you want to put your money at? When does the money have more value to you? Well, I always put it this way. Freedom and experiences at the age of 62. You got the higher volatility for travel and physical and active hobbies like golf, hiking, and so on. Creating memories with your grandchildren while they're young. That is a big one we do. I take my grandkids on a cruise. I take them for summer vacation for a week. I take them on a cruise once a year. I want those guys to know who their grandfather is, who their grandmother is, and how we spent quality time with it. I didn't have that as a kid, and I wanted that. So freedom and experiences is big for us. Immediate relief from work-related stress and monthly bills, and funding home improvements or lifestyle upgrades in my go-go years. This is when you want to take the money early. You want to be protected in security for larger inflation adjustments, enhanced protection for health care and long-term care, reduce your reliance on a dwindling portfolio, and peace of mind knowing that your surviving spouse has a higher benefit floor. Well, when we sat down and talked about kind of where we both are going to probably end up being and how we're going to play and where we'll be about it, we both again agreed that we want the freedom and the experiences and let our money that we currently have work us if we do get to that 80 category. So these are the things that we talked about and went through, and none of this had anything to do with how much money that we had, how much what we're doing. It's our goals in life that we wanted to establish and that we wanted to do personally. So the opportunity cost, what could 8 years of payments actually do for us? Well, it builds a nice cash reserve. It's going to protect my portfolio for down the road. I can maybe go a little more aggressive growth than worrying about all income living off of it. For 10 years, I've lived off my dividends. That's how we started this. This is why I have the logo on the cups that you're drinking. Is I lived for 10 years off of dividends. It's going to be great that maybe we can reduce this down a little bit and not have to worry so much on the dividends. Not that I'm worried about it. I could go probably the rest of my life with what we've done because the system works. But this is just going to be a bonus for us. It's going to eliminate any extra debts we have on ourselves. We just remodeled our kitchen. Okay, that's going to help cover that debt that we had to take out for that. And we're going to do it reinvest. Like I said, grow our portfolio even bigger. So I know if I do pass earlier than she's taken care of for life. And if she passes before me, I'm going to be taken care of for life. And if we both pass together, that our kids will be taken care of long past that. So the total capital received by the age 70 if claiming that $2,500 a month and starting at 62 is almost $250,000 extra. That's a big number you can't miss. So the strategy belongs inside a retirement plan, not merely a spreadsheet. And I told you about all this, that this all thing comes down to, it wasn't just about an age. It wasn't about a check. It was about a whole system that we talked about. We talked about our retirement plans, what we want to do, and we always had a 1, 3, and 5 year plan across the board. So married couples, you got to plan for 2 lives. It wasn't easy. It's not an easy decision. When I get all done with it, my wife agreed. This was not just about 62 or 70. What we did was our housing, our household perspective, the plan shifts for individual longevity to the household survival. We consider both spouses' working records and the possible spousal benefit eligibility. The goal is to maximize the combined lifetime income for both. Okay? And the potential strategy study, the lower earner may claim early to provide immediate household cash flow. The higher earner delays until 70 for that maximum amount. The results create an income today while locking in the largest possible survivor protection. We talked about all this as well. And quite frankly, we looked at it, and I think honestly, I mean, I may delay to max, to the max. But we really looked at both of this and we dialed it in and worked together. So the earning test, claiming while still working. Some people talk about this one. I'm still working, I'm going to claim. Well, if you file for below your full retirement age, you can only earn $24,480. Now that's W-2 paperwork. That's not your investments. That's none of that. It's basically it's $24,480. Social Security will then hold $1 for every $2 earned above that annual limit. If you reach your full retirement, then basically your higher annual limit withholds 1 for every $3 earned. And then after your full retirement age, you have unlimited income at that point. Okay? So you got to know this stuff. You got to be able to work with it accordingly. Some people say, oh, I'm going to collect it when I'm still working. Well, you're going to fall into one of these categories, and you're really not going to collect that much money across the board. So you really got to calculate what's going on, when to do it properly. So how does the money actually, do you actually need the money? It's a question that we asked ourselves. Do we actually need this money? And eligibility alone is not a retirement strategy. Your decision must serve a specific purpose. When early claiming fits job or health, leaving a job that is physically or mentally damaging to your health, assist protection, claiming allows you to retire without premature draining of personal savings. Longevity concerns, family history, or personal health suggest a shorter life expectancy. And debt management, using benefits to eliminate high interest debt and reducing that monthly bill anxiety. And that's a health issue right all on its own. When to wait, your income strength. You are still earning a strong salary and you don't need the extra cash. Longevity, if you have excellent health and you expect to live in your 80s and 90s, yeah, go ahead and wait. The future, prioritize a large inflation adjustment, income floor, or late life protection. And the survival strategy, delaying your maximum for future survival benefits for lower earning spouse. So every family's different. Every family, every couple's been different. We sat down and looked at this and I said, why should we claim early? Well, a couple different reasons. We know the family history on one side's not good, the other side's great. Where does that give us a mix? And allows us to basically, I always call it debt management. Even though I don't have a lot of debt with it, and primarily because I have a kitchen that we just did, but it uses the benefits to reduce it and get rid of that bill anxiety. I almost feel that we got our cost of living down to where we almost can tell you we could live off the money and be fine. But these are the things that we had to work through and go through the entire process. So the 5 questions before you claim Social Security. Can I give you something easy to work with? Something to sit down at your at your dinner table, or sit around and just be able to talk with your spouse. And I always say, both of you sipping on your Doug to Retirement Made Easy coffee mugs, what are you actual benefit estimates from 62 and 70? What are those numbers? You got to have that written down on paper. What is your personal break-even age? What age is it to break even? Where does it make sense across the board? What does your health and your family longevity history say about you? Don't be afraid. Those are the tough questions. How will my decision affect my spouse? You got to look at the long term, one or the other, or both. And what will I do with the money? Spend it, save it, invest it, or live off of it? And none of those decisions, those 5, the save it, spend it, invest it, live on it, none of them are wrong answers. You can pick any one of them because it's your money, you earned it, you basically paid into it from your paychecks that you work so hard for. What do you want to do with that money? It's a long-term decision to make. So, guys, here's my retirement philosophy. Freedom versus spreadsheets. The heart of the decision. Retirement planning is not about winning a math contest or dying with the largest account balance. It's about a dependable income and the freedom to enjoy life while you're able. Everything I talk about on this show, everything I talk on, every video I make is all the same answer. It all comes down to freedom. It's the freedom of life. When I retired at 50, I don't know why that number came to me, but it was, bottom line, it was the magic number that made me freedom. I didn't have to worry about a bill. I didn't have to worry about a mortgage payment, a car payment. I didn't worry about anything. I had enough money coming in that I could live off of comfortably across the board. And I've done so well. That's why we started the YouTube channel, to help others meet the freedom that we have. And then my wife quit her job and she was like, wow, couldn't believe the freedom. My brother, my sister have done the same thing, and other people I've worked with all come back and say the same thing. I cannot believe leaving my job and living like this, living on dividends, how the freedom actually has worked. You need to have dependable income, you need longevity protection, and you need that retirement freedom across the board. Guys, let me know what you think. Leave a comment down below. I really appreciate your time, and hopefully this video helped you make a decision of when to retire. And don't forget about our 40-ounce travel mugs. Again, I know I'm saying it because it's not about coffee mugs to me. It's, I broke mine. I'm upset, but we got these available now. Don't be afraid to get yours.